The complexity of the world of investing seems overwhelming. On the one hand, we have conservative products, such as bank and savings accounts, and on the other, risky assets from stocks to derivatives. At the same time, it's difficult to explain in a nutshell where we should send money so that it is valued and we do not lose the deposit. Recently, we were sitting in a restaurant with a friend and he suddenly asked me, "Hey, what should I invest in?" I had a minute to explain and I was hungry. Can you imagine? Welcome to Invest with Jiří channel. Today we will focus on an overview of assets in which it is possible to invest in order to maintain their value over time. If you don't want to miss my other investing videos, please click subscribe below the video. And if you are thinking of investing, check out my Patreon, where I have recently been editing compound interest calculator or a fair estimate of Amazon's price. And I would love for you to join and grow my investor community. You can find the link in the description of the video. There are many investment products in the financial world, and since each one has its own specifics, it would be useful to go through them a bit. We will talk about both banking products and real estate and/or investments from the financial world. Bank products include, for example, bank accounts, saving accounts, term deposits or investment funds. In the case of real estate, there are opportunities to invest in apartments, homes, garages, parking spaces, apartment buildings, offices, and so on. There are plenty of options. If we are talking about world stock exchanges, then here we can trade with stocks, bonds, ETFs, Forex, commodities, options, and much more. Each of the assets has its advantages and disadvantages. It cannot be said unequivocally that real estate is a security and stocks are a risk. In this channel I will mainly deal with assets from the stock market world. It offers the best ratio of risk, return and liquidity. Stocks and exchange traded funds, so-called ETFs, are ideal. In the next videos, I will return to the individual assets and explain their basics in detail. Now, let's look at another important component, diversification. Before we start investing, we should divide the risk between the amount of allocated capital, between different assets, between different maturities, etc. Business can be an example for us. If a company tries to build its business model on multiple products, it becomes stronger and more resistant to external influences. Any outage in the product line is replaced by other products. We can show this very well at pharmaceutical companies developing drugs or medical equipment. is extremely expensive. In order to withstand market fluctuations and the influence of competition, the company must develop a number of independent products that it can offer. If cold medicine is not on sale, allergy medicine will be. In the event that the drug business declines, it pays to sell devices to hospitals. It is a multi-layered distribution of risk, vertical and horizontal. It's the same with investing. We should focus on several products and divide our money between them. E.g. part should go to ETF funds, another part to stocks and bonds, and we should not forget cash. How could we diversify? Different asset classes, stocks, bonds, real estate, type of assets, growth, value, dividend, sectors, finance, energy, utilities, geographic, US, EU, Asia, size, mid-size, larger, blue-chip companies. Let's look to potential assets to deposit money. To make the list easier to navigate, I divided the valuation parameters into several categories according to the level of risk. The rating is based on my personal point of view: risk, yield, liquidity, and duration. Interest on current accounts is usually zero. We shouldn't leave money here long term for two reasons. They don't earn us anything and the value decreases over time due to inflation. Although we will have the same amount per year into account, we will actually buy less with it, depending on how high inflation is. Savings accounts are an ideal tool for financial reserve. Although they are valued only in percentage units, we can have them at our disposal at any time. So the power of savings accounts is in liquidity. And that's all. Term deposits. If we have cash that we plan to withdraw by a certain date, we will use term deposits. We have options to deposit money for a year, 2 or 5, and until this time expires, we cannot access the money. In case of early termination, we will lose the agreed interest. We will keep the principal, of course. Bonds are among conservative investments and their profitability varies in percentage units. We have government bonds, bank bonds, municipal bonds issued by cities and/or corporate bonds. It differs by eminent domain and its bonito. Mutual funds. They are mostly collective assets managers, banks and funds that provide for a small fee the management of our money. The fee structure usually includes an entry fee, an exit fee, an administration fee. We should choose mutual funds if we are willing to significantly reduce the performance of our investment. Of course, this may be the way to go for some, but I think there are better ways. ETF funds, a much better alternative than mutual funds, are so-called ETFs. Exchange traded funds. Recently they have been talked about everywhere. It makes sense. We can buy them like stocks. An ETF contains a basket of stocks. For example, we have index ETFs, sector ETFs, blue chip stock ETFs, oil ETFs, etc. The riskiness is significantly lower than with stocks due to diversification into a number of stocks. Cost is also low. This is one of the important ways to pursue financial freedom. Real estate belongs to human needs. We all have to live somewhere. Investing in real estate will provide people with basic needs, and you will pay off the real estate gradually with monthly rents. I personally have several apartments for rent, and I can confirm that investing in housing pays off. The disadvantage of real estate is its liquidity. This means how long we are able to sell the asset and get our money back. Sometimes it can take months. You can also invest in real estate through so-called REITs. They are traded on the stock exchange, similar to stocks.
When you say you feel low and good things are hard to see, when you pray to find love, I know somewhere we could be. There's a place where we can go tonight. The rhythm will make it right.
Alternative investments include investing in cars, wines, stamps, paintings, etc. My niece has been buying toy horses since she was 5 years old and has a basement full of them. Now she is 18 and she told me that she would sell those horses for several times more today. Stocks. Tons of books, articles and videos have been written about stocks. It's an ideal means of evaluating finances. At the same time, they are high risk, and when one is new to the markets, one can easily get burned. Stocks are highly liquid and you can cash them out almost immediately when you sell them. When investing, we should expect that we are buying for several years or decades. The so-called long-term investing. Forex, the currency market, is the largest in the world. Banks, funds and companies buy and sell currencies here. Buying and selling is instant and transaction can be made at any time. The currency market fluctuates in pence and is not ideal for long-term investing. Forex is adrenaline fun for many people, thanks to the possibility of high leverage. You can trade with high capital for little money. You can earn a lot, but you can also lose your entire account. Commodities. Commodity futures markets are an integral part of our economy. Without them, producers would not be able to secure the future price of the commodity, and buyers would not be guaranteed the supply of the raw material in the future at a fixed price. Commodities go through long trends that are suitable for long-term investing. However, since we trade futures contracts on the basis of monthly contracts, commodity ETFs are a more suitable tool. Cryptocurrencies have become an integral part of the financial world, offering a replacement for fiat currency. However, their price fluctuates over time, similar to the entire market. So there is no question of diversification here. Cryptocurrency funds most often hodl cryptocurrencies, i.e. they buy them and keep them forever. Cryptocurrencies can be stored on an exchange or in a physical wallet. Investing in your own business. If we were to move away from classic assets and look at investing through the lens of owning your own business, there is a path that takes a lot of effort and time but has the potential to take you from zero to millionaire. I've been in business for a few years now, and it has allowed me to buy several investment properties, visit several countries in Asia, and maybe travel with my family for several months a year. Investing in yourself. Personally, I see an advantage in investing in one's own development. As the only species to dominate the planet, humans became humans through the ability to learn and adapt. None of the animals on Earth has that ability. That's why we took over the planet. Read a lot, be curious, think and build bridges to reach areas that now seem incredible to you. How long should we develop our own intellect? Forever. That would be all from today's video. Thank you for watching, and if you have any question, feel free to write me in the comments below the video. Have fun and invest wisely.